Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, last week we saw Netflix and Tesla numbers, and we got two very different responses in the market. This week it's been the turn for Microsoft, Alphabet, Meta, Apple, and Amazon to report. And as I thought, this has turned out to be a very interesting week. Meta plunges 30% in one day, and Amazon breaks key long-term support, which unfortunately has dire implications for the stock. And the balance sheet changes were stunning, with Apple leading the way. What all this means to investors, we'll take a look in a moment. Earnings season is one of those particularly notable times when it's nice to see how your own stocks are dealing with this key news. This is one great advantage of being a client of ours. You can closely monitor your own SVA charts so you can see when the market is blowing smoke or if change is in the air, for better or worse. When changes are coming fast and furious as they are now, and as I expect will be the case for some time to come, joining our investment community will keep you right up to date with all of your portfolio holdings and keep you well informed. Just go to www.strategicanalysis.ca/pricing and get started today. By the way, as I added last week, our fees are far more modest than you think. One good SVA trade will pay for our service for years, as a couple of our FANG Friday viewers who became clients of ours this year have already found out. Now, before we get to the FANGs, a quick reminder that I will be on BNN Bloomberg Television's Market Call on November the 10th at noon. If you have any questions, just send them to marketcall@bnnbloomberg.ca. And if you get your questions in soon enough, there's a good chance that they will be raised by the moderator. Now, before we take a close look at the FANGs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Well, we know who we have to start off with, don't we? Meta. And talk about disappointment. Holy smoke. This stock plunged 30% in one day. And in fact, look at what happened. It plunged all the way down a one full breakpoint to its growth price. And it's holding there, by the way, today as we speak. Amazon reported okay numbers, but they weren't very exciting, and that's not terribly surprising, because how much bigger can Amazon be before it sells every last thing in the world? And that's not going to happen. Well, today, the stock has broken its bubble price. That's 7.4 times book value. And if that is maintained, it has quite significant implications for the shares. Microsoft kind of beat top and bottom, but it kind of disappointed on its guidance, and the shares have been unable to get back over their HB1 price again. That's 9.5 times book value. Frankly, my sell recommendation on the stock, I think, remains in place. It started HB3, failed the HB2. We're struggling at the HB1, and I think the bubble price is coming up. Alphabet had an interesting situation here. If you go back and you look at last week's FANG Friday, you'll see that the structural valuation for its low super growth price, that's 4.5 times book value, was a fair amount higher than this week. But now that we have the new balance sheet in, we see that the low super growth price, in fact, has fallen to $93.50. Well, the stock fell precisely down there on its earnings news, but today it's rebounding. I would watch very carefully here, because my own suspicion is that, as we see in the longer term view here, I think that the fair market value, the earnings, are rolling over as online advertising continues to decline. And I think that the long-term fulcrum value, its super growth price, which currently is $72, lies in the future. However, it hasn't broken its LSG price yet. Tesla continues to hold at its HB3. The only thing that might concern anybody about Tesla is look where the fair market value is relative to the shares. By the way, that's 60% lower than where the price is currently today. NVIDIA broke down, has rebounded, but you know, when we take a look at the rest of the stocks in the industry, led perhaps by Intel, okay, we see a very grisly picture of what's going on among the semis. As a consequence of that, I am very concerned about the ability of NVIDIA to hang in here. Now, Apple. This is interesting, because remember, I had been waiting and waiting and waiting for the balance sheet to come in, and now it's come in, and what do we see? Well, as it turns out, okay, the company has been continuing to buy back stock, and the stock bottomed, therefore, right on its HB6 price. Okay, that's 33 times book value, and has rebounded. Upside target maybe HB7 now, which is somewhere in here. Now, what's important about that, and I think why might we hang in there? Well, let's take a look, the longer term look at Apple. We see, okay, that the stock the company rather, has continued to buy back stock, and the importance of that is, and to find out, we're going to click on this little button down here, the price to book, and what happens when we do that? What we see is the dotted line now becomes the ROE, the return on equity of the stock, and as it continues to rise, okay, it keeps pushing on the valuation and price to book terms to keep rising, and that's the dynamic that's driving this stock. Finally, Netflix, my absolute favorite stock, continues to that break over its mid-super growth price. That's 5.5 times book that we saw last week happening. The stock has been moving strongly and steadily towards its bubble price, and I think that it's going to get there. It's nice to have a winner in our pocket. Now, in summary, the plunge in Meta tells us a lot about investor belief in this metaverse thing that Zuckerberg has been touting. From a business point of view, it appears to be a sham, and from an earnings point of view, a big fat nothing. To all intents and purposes, the stock market has written the metaverse right off. The only thing left is for the company to take its own write-down of its investment in it. Now, the gutsy among you might want to take a shot at the stock right now at 2 times book value, its growth price, for a rebound, as the fair market value is strong, so far at any rate. And the shares are the cheapest of all the FANGs. If you do, I'll cheer you on from the sidelines. Alphabet is trying to hold at its new reduced LSG price, 4.5 times book. But the fair market value is rolling over as online advertising continues to slow, and as I suspected was going to be the case. I have no sell on the stock right now, despite the weakness in the share price. Indeed, it did bounce off the low super growth price today. But if you own it, be wary of a break, because we know where the next downside target is. Amazon has broken its bubble price support today, a singularly important event. It is interesting in the mathematics of structural valuation analysis that some breakpoint levels carry a significant measure which has an astonishing tendency to come out in the price of the shares. Breaking the bubble price is one of the three most important negative signals in all of SVA in regards to the fundamental meaning that they portend. Remember what happened when Netflix broke down through that barrier. It fell a full 50% before finding its feet again. Unless today's action is just a one-day wonder and it's going to claw back over the breakpoint again, it may now be Amazon's turn. And if this is confirmed, I would not be surprised to see that the same outcome lies ahead for its shares. Now, I would not expect a rapid plunge as occurred in the case of Netflix, as there is a lot going on in Amazon, although the significance of the break is unmistakable. I took a look at the earnings and then the management statement today. There are 3 pages of things that Amazon is involved in. So there's a lot of moving parts in this company. So as I say, I don't expect a collapse as happened in Netflix, but I do expect a slow but steady market decline. I also have a sneaking suspicion that if Amazon does let go, it would be in many ways a key signal concerning the rest of the NASDAQ growth stocks. This is not a forecast, by the way, just a hunch, at least for now. Microsoft and NVIDIA have checked back towards their key breakpoints after breaking down below them, but as I said, I would not reverse my sells on both stocks, and certainly for now. Microsoft is trying to regain support at its HB1 price. That's 9.5 times book, but nothing so far. NVIDIA remains uncertain and is still floundering around at its own HB2 price. That's 12 times book. But I have no confidence in the outcome, and I suspect that its own bubble price is in the offing. As you know, I was particularly keen to see the new Apple balance sheet, and now we have it. They have continued to buy back stock, and the ROE continues to rise, keeping the stock valuation rising as well. I have never been able to pull the plug on this stock, and this is the reason why. And not for, by the way, any of the fluffy reasons that analysts are giving you for buying the stock. I might not care for it, but you can't fight City Hall and strong share buybacks. My favorite FANG, Netflix, held over its mid-super growth price, 5.5 times book, a minor breakout, and the stock not only held but is moving strongly upwards. I would keep my stop loss target, by the way, at the MSG price, kind of just in case. But the bubble price is becoming a strong probability, having graduated from a mere possibility. So, lots to keep in mind this week. As we've seen over the past 3.5 years in our FANG Friday telecasts, these behemoths have provided many opportunities to trade both on the long and the short side, and nothing has changed this week. There's always more to do. Again, I will be back on BNN Bloomberg Market Call on Thursday, November the 10th at noon, so if you have any burning questions that I can't answer here, just send them in to marketcall@bnnbloomberg.ca. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you